Welcome to our CIO Series number 19. We will be checking my 5 predictions made for 2025 at the beginning of this year. A standard disclaimer, this is for information purpose only. No recommendation or offer to buy, sell any securities. You should decide yourself whether the information is suitable. And we may trade or invest in the stocks mentioned here. All information is subject to change without notice. Investing involving significant risks, please be careful. And we take no liability whatsoever for the use of the information on this webinar. And my name is Wang. I'm the CIO for Private Wealth Management at UOB Hian. Earlier this year, I made 5 quote-unquote bold predictions for 2025. At the time, they seemed really crazy, but at least 4 of the 5 predictions are coming true. And we'll be going through them one by one today. The first prediction, which seemed pretty crazy at the time, that the Chinese economy may surprise on the upside. As you know, earlier this year, most investors worry about Trump's tariff on China and Chinese economy continue to struggle, also the lack of policy. However, the December retail sales, which was reported in January, was up 3.7% year over year, better than expected. And within that, household appliances was up almost 40% year over year, and overall up double digits in 2024. The reason I want to mention household appliances or home appliances is because it's a beneficiary of China's trading program for consumer goods. So in a way, the policy is working and consumption is recovering. In January, we also are seeing better than expected CPI, the fastest CPI growth in 5 months, and the strength has gone beyond the food prices, which significantly reduced people's fear about deflation in China. And we have a continued decline in real estate sales, but much better than the 33% decline in January 2024. We recently recommended 2 stocks as trading buys, CR Land and Collie, both state-owned developers in China, benefiting from the recovery in China's real estate sales. However, until DeepSeek, people didn't care about all the numbers I talk about. So most of the numbers is not new, but the market did not go up until after the DeepSeek launch. So let me recap that we are definitely seeing a cyclical recovery of the Chinese economy in line with my expectation. And this recovery has more to do with a low base in 2024 than anything else. So that's what I call a cyclical recovery. This doesn't mean China has resolved all the long-term problems. And one of the biggest problems China had is not Trump, is not real estate or consumption, but it's the population crisis. So you can Google or use ChatGPT or DeepSeek to answer this question here. Does China have a population crisis? I think the answer is yes. Long-term issue not resolved, but short-term we are having a good recovery. This means there are some trading opportunities. And DeepSeek, as I mentioned earlier, has greatly improved the investor sentiment on China, allowing people to refocus on the economy, the markets, and the data. In other words, before DeepSeek, nobody cared, even if the economy was improving. Now, I think people may take the data more seriously, even though DeepSeek has nothing to do with the macro, but DeepSeek is definitely a confidence booster, and we are hopeful that this may spread over other sectors than tech, as investors seeing more a traditional recovery of the economy, including real estate. Earlier this week, I shared that Hang Seng Index had one of the best February and January returns in the last 5 years, up double digits. And it looks very similar to 2021. We hadn't had a good run in Hang Seng in the first part of the year since then. And a lot of people wonder if are we going to replicate in 2021? Because 2021 was not a particularly good year, even though the year beginning return was good. My short answer is no, because 2020 was a good year in terms of economy, and 2021 are seeing a cyclical downturn in terms of macro numbers. We are completely the opposite. 2024 was so bad that 2025 we could see a mild recovery, and no worry that we're going to have a strong February and January, and then the market traded down later, which was the case for 2021, but not the risk for 2025. Okay, my prediction number 2, also very controversial at the time, saying that the U.S.-China relations could improve for the time being. Again, not saying that all the problems are resolved and U.S. and China are suddenly good friends. There's still a lot of long-term issues between the two countries. The competition, the conflicts will continue, but it is possible that Trump and Xi Jinping are seeking some kind of economic independence. While US and China wanted to decouple from each other, it is actually very difficult to completely disengage from each other. And DeepSeek has an implication to that as well. We talk about that later. So my point is that DeepSeek's implication is not just limited to the AI or technology. I talk about the restore of investor confidence, and this may also lead to possible opportunity for US and China cooperation in selected areas. When it comes to US-China relations, a key person people think about is Elon Musk. You know what? He's not the person that made the most trips to China last year. Apple probably has more vested interest in China. And Cook has made multiple trips to China last year. And recently, as you know, they signed a deal with Alibaba to roll out Apple Intelligence. That's to my point. DeepSeek has changed people's mind about the Chinese AI models. And Apple increasingly view China as an important market for its AI strategy. And these companies could very well help improve, not just Elon Musk, but companies like Apple improve the US-China relations. Trump, on the other hand, is also placing more emphasis on Silicon Valley. There were no trillion-dollar tech companies when Trump first took office in 2017. Today, almost all big tech companies, at least $1 trillion, Apple's $4 trillion. That is the change between Trump's first term and the second term. So Trump is placing emphasis on Silicon Valley. He signed a deal for Oracle, OpenAI, and SoftBank for a $500 billion AI infrastructure deal. Silicon Valley is important to Trump. China is important to Silicon Valley. That's why I'm hopeful for some kind of truce in US-China relations. Again, does not mean every problems are gone or US and China suddenly are back to honeymoon. No way that's going to happen. But there are areas when the two countries can work together. Number 3 prediction is on large cap underperforming small cap. That hasn't happened yet. This is not the focus for our talk today. We can certainly talk about more about this later, if you like. One thing we missed is the mid cap actually outperformed. So we originally expected large cap to underperform and small cap to outperform. But what happened was, yeah, large cap did not underperform, but the mid cap outperformed and the small cap underperformed. We only got 2 months into the year, so there's still more time for us to test our thesis. We continue to like the US small cap as a key beneficiary of Trump's pro-growth, pro-business policy. You think about the small cap US stocks are mostly, almost all of them are domestic US companies benefiting from the domestic US economic growth. Prediction number 4 is about asset price volatility, and this has not happened, but I want to keep this on your radar screen. And the thesis is that asset price is a risk. And people say, is this nonsense? Because risk by definition is volatility. Yes and no, because I also define volatility as a black swan extreme risk. It could happen in a very short period of time. I'll give you an example later, but will have a very big impact on global markets. So Paul Davino, our US strategist, and I have done a lot of work last year on how a US market crisis or global market crisis really happened in the past. We will worry about consumption at that time because consumption is important to the US economy. Our original thinking is that you may have softness in a certain segment in the US economy, like consumption, like retail sales, and the problem get bigger and become a crisis. And that leads to a stock market crisis. But this is not typical of what happened. What actually happened in history is you start with an asset bubble. It's not a big asset bubble. It's a small, it's a relatively a segment of the market. And that bubble bursted, such as the subprime crisis. This bubble burst, which is more started with asset price, but then becomes an economic crisis, eventually become a general market crisis. And we already had this example last year. I'm not sure you guys remember the Japanese yen carry trade. It's an asset price volatility issue. And my 28 years of experience tell me that there are 5 things we need to check to ensure that these are indeed the source of risk that we need to care about. In the case of Japanese carry trade, it's a big market. It became a bubble to a certain extent because US dollar is going up so much against Japanese yen for an extended period of time. It could be a crowded trade, and there's a lot of leverage. The good news is that there is fundamental support for the weakening Japanese yen, but if you look at 4 or 5 of the 5 factors here, it fit the description. It led to a mini crisis last year, we call it a flash crash. And these conditions were met perfectly almost. What's next on our radar screen is Bitcoin. Arguably, Bitcoin is much bigger than the Japanese yen carry trade. 10 years ago, I would not be worried about Bitcoin. But today, Bitcoin is a $2 trillion market. It's big enough. Some say it's a bubble. Others say don't think it's a bubble, but I would say it is still bubble-like. It's done very well in the last few years. Very crowded trade. Even my mother knows about Bitcoin. And no fundamental support. And tons of leverage. This leverage may not be so evident But in companies like MicroStrategy, it's basically a leveraged play on Bitcoin. And that's my worry, that if later this year, if we have more volatility and more these extreme movements in Bitcoin could cause not just the Bitcoin market, but the global market to experience something like the Japanese yen carry trade last year. Gold also fit the description. The thing slightly better for gold is that there's fundamental support. It's maybe not so crowded. Individuals maybe not so crowded into gold, and mostly the central banks are buying gold. And lastly, Magnificent Seven's probably even better. Even though it's a crowded trade, it's a big enough trade. It's also becoming more like a bubble, but there is fundamental support. As you know, in the first quarter this year, most of these companies reported better than expected fourth quarter earnings. On gold, I just want to quickly point out that there's a very strange, quote unquote, strange phenomenon of gold bars being shifted from London to New York, because there's arbitrage trade going on with shorting gold and have physical delivery from Europe to cover that short. However, that delivery is running into problem because there's a bottleneck in the transportation. I'm not a commodity expert, but I just don't like the sound of that. It could cause gold to gap up, to melt up, and melt down. And that's the volatility I'm talking about. So let's also keep gold on the radar screen. Our last prediction, which is also coming true, is on Edge AI. And I've talked on numerous occasions about this. It's really about the localization of AI application services or even AI models on your phones, your PCs, your smart glasses, your electric vehicles, or even your refrigerator or washing machine. That's what I call Edge AI. And DeepSeek has confirmed that the focus should no longer be just on AI GPUs and data centers, but on Edge AI. Why DeepSeek is good for Edge AI? It's trained on the lower end GPUs. It doesn't have as stringent hardware requirements as other models. And phones, for example, don't really support, NVIDIA GPUs today. Is lower cost, lower power consumption, smaller size, and most importantly, it's open source. DeepSeek is true open source. That means that that companies can leverage that into various different types of devices in the future. Having said that, it's still not possible to host DeepSeek on local devices yet. And this is where Apple and Meta will come in the Edge AI space. I'm not sure you've been following my advice. I've been pounding on the table for Meta for the last 6 months. It was our number one pick for everything. Number one in M7, number one in AI, number one in Edge AI, and finally, it's our predictions are coming true. Apple, it's a trading buy. It's not a high conviction play as Meta, but this news is significant. Just happened not long ago that Apple is partnering with Alibaba to roll out AI features for iPhone in China. That's Edge AI. Alibaba stock went up, but I really think this is a much bigger deal for Apple than Alibaba. Apple's strategy is not simply to sell more phones. If you think this deal is about boosting Apple iPhone 16, then you may be missing the bigger picture. The bigger picture is that Apple needs to catch up with its Edge AI or Apple Intelligence services. To do that, They need a big market like China for the trial run, to collect the data, to collect the feedback, to experiment, to modify, to improve. And they already got the US. iPhone 16 is already offering AI services in the US. Europe will be rolled out in April this year, and China will follow in May. These are all very big potential stock triggers. Again, if you trust me on Meta, you need to watch Apple. It's a laggard. It's a very controversial stock. People underestimating its potential in edge AI, and edge AI is the place to go, no longer just NVIDIA. And Apple, it's a trading buy. So let's watch in the next few months how Apple is rolling out those services in markets other than the US. And I bet they're going to have multiple upgrades to its AI services, which will hopefully drive up the stock price and prove my thesis. Okay, I'm going to stop here and take any questions. If you have a question, please use the Q&A window to enter your question, and I will answer them in the order they are received. The first question is on thought on Baidu. Before I talk about thought on Baidu, why don't we talk about Apple's thought on Baidu? Like, my thought may not matter because I'm not a technologist, but Apple obviously chose Alibaba over Baidu, right? The news was that Apple was supposed to work with Baidu, but didn't go ahead with it. Why? I don't think Apple was stupid. So we talk about a technology capability. Who has the best AI models today? Some people say DeepSeek. DeepSeek is the best model in China, but Alibaba's Qianwen is also a close second, or maybe even neck with DeepSeek. But Baidu is nowhere to be found. And I think that's possibly the reason they were not invited to the meeting with President, because China might be dissatisfied with Baidu, given that it has given so many resources and it's given monopoly power for such a long time, and nothing came out of that company, nothing leading edge out of that company. So I think this company will continue to face technological issues. And just a side story, that Apple was also very close to choose DeepSeek as its partner for Apple Intelligence. But DeepSeek just doesn't have the manpower to support Apple. Alibaba does. So you can kind of see by Apple's decision, you can kind of see who's leading, who's not in China. Anyone has a question, please use the Q&A window to enter, and we will answer them in the order they come in. The next question is on how far I see the China tech market may go. The earnings doesn't seem to be catching up yet, and the Chinese government prefer a slow bull market. That's a great question. So I'm not sure you see my view yesterday. My suggestion was to take profits in China tech. Hang Seng Tech Index has been up 50% since December 2023. That's 2 years ago. NASDAQ has been up only 40% since that time. And I thought it's getting a bit crazy. Even though you can say that China tech has come down a lot prior to 2023, it's just a recovery. But even if you look at the valuation, which I also shared today with some of our sales, Tencent is trading at 18 times price to earnings, Alibaba at 13 times, and both of these companies are unlikely, even with DeepSeek, even with AI, are unlikely to grow more than 20 or 25% a year. And the reason is very simple. The government does not want them to grow that fast. They also don't want to grow that fast to instigate another crackdown. So despite Xi Jinping's meeting with tech companies, it doesn't mean that China's long-term policy on containing big tech in China has changed. Okay, so we need to be very careful. Look at the US, a company can grow 20, 30% with no attention from the White House. Well, there's antitrust, but most cases is kind of a non-issue. And with Trump in office now, that's even become less of an issue because he wants to deregulate. So US tech companies and China tech companies are fundamentally different. They are growing. Chinese tech companies are growing, but we ought to be cautious when things become too good. And another thing I didn't mention today is, well, I did mention earlier, was about a population crisis. So longer term, the negative growth in Chinese population also not good for Chinese internet companies. The earnings need to catch up. Yes, Baidu earnings was horrible. And Alibaba will be reporting in less than 2 hours, I think. Let's watch that. And like I said, I don't think DeepSeek can change the fundamentals of these companies so fast. Chinese economy is recovering, but Chinese consumption still have some challenges until the real estate fully recovers. So I expect Alibaba earnings to be weak. I expect the market to realize that after all, these companies are not cheap. They're not expensive, but not cheap either. So let's be a little bit cautious on that for now. The next question is, how can the edge AI devices have so much computing capacity to operate? Do they rely on so heavily on cloud-based computing to provide AI to the user? And how do the edge benefit us? Oh, that's also a very good question, Larry. Yes, so that you're basically laying out the industry's challenge or the industry problem right now. And whenever there's a problem, there's money. We see problem, Silicon Valley sees money. So yes, so the edge AI devices are nowhere near as powerful to run the AI model. The AI model today are mostly run on the data center in a centralized place in so-called cloud computing. But definitely the plan is to improve the model, right? So you have two things going at the same time. And that's why I think DeepSeek is so meaningful. So one thing is about how do we make the model smaller, more efficient, and faster, and lower cost. That's the software side. And China is giving us some tips on how to do that with the DeepSeek. The other thing is on hardware. How do we improve the hardware to run the model and run the data on your local devices? So it's not going to be solved overnight. So, but over time, as these two things happen at the same time, we hope to transition more AI computing onto your handheld devices, your personal devices, and less on cloud computing, and less and less on 5G networks or networks. This is not just the industry version, not just my vision, but also Jensen Huang's vision. If you watch some of the speeches, that the NVIDIA of the world is also working on how to make chips for the devices, including cars, by the way. Electric vehicle, that's another very important device to think about. And the benefit to us is that it actually will bring real convenience and services. I have a gut feel, and please correct me if I'm wrong, model is losing its freshness. The model today, they do a lot of Q&A. They can answer your question. They can even see where you are and sense your environment, but can't really do anything for you. I'll give you one example. I can tell the model, ChatGPT, DeepSeek, or others, to plan a trip for me to Tokyo, Japan. But the model today, as far as I know, has no capability of booking the trip for me, or booking the hotel for me, or actually commercialize the service. Right? So that's not models work. That's Apple should be doing this. So there should be a middle layer of companies and players focus on how do we turn this into a transaction. It's from a question, a problem, to a transaction. So that's what Edge AI will do for you and do for us. It will be a win-win for both the consumer and the service providers. And we will see more of that happening as we go. I'll give you another example. The other day, I was booking a ticket on trip.com, which is also our core recommendation. I had Microsoft Copilot opened. When I was booking the trip, Copilot automatically pop up a window looking for coupons for me. After a search about 20 seconds, Copilot said, "Sir, your ticket currently is the cheapest price I can find for you. There are no applicable coupons." See, it's happening. Try it. But this is still very primitive. I still have to manually click the coupon in the future, or still book the ticket. But in the future, it will be more automated. It'd be smarter, more automated, and more convenient. Hopefully that answers your question. Anyone has any questions, please use the chat window to enter, and we will answer them in the order they come in. While we wait for the question, maybe just recap on my China market view, the short-term view for now, because this is always a hot topic, given the market movements in Hong Kong. I said earlier that my suggestion is to take profits in China tech and China internet. Let's take a wait and see, especially on earnings. Stock has gone up a lot, probably run ahead of the fundamentals. And don't forget, Trump is still there. And the tech sanctions or whatever is in place, even though I said the US-China relations may improve, it doesn't mean Trump will let us off the hook. So there's also a potential risk on the sector. Now, what do you buy if you do want to build up your China exposure or want to maintain your China exposure after you sell? One suggestion is to buy some low beta defensive names in China. So as you know, we've been pushing China Mobile, PetroChina, and HSBC, which reported earnings last night, as defensive, high dividend yield paying, low beta stocks. The beauty of these stocks is that even if the market crashes, they may come down less than tech, and if the market goes up, they will participate, even though they may not go up as fast as Tencent or Alibaba. So that's a good choice. The high dividend yield plays. China Mobile at 6% yield, PetroChina at almost 7%, and HSBC still offer 5%, and while the company is buying back shares. The other is move your attention away from technology. As I said earlier, while DeepSeek is happening, Chinese economy is also improving, slowly but surely. So I expect the cyclical plays in China will also benefit. I talk about real estate is improving, and the February real estate sales in China will be announced at the end of this month, which could be another stock trigger or catalyst. And our two trading buy, again, this is a trade, not a buy and hold. Two trading buy recommendations are China Resources Land, 1109, and Collie, I mentioned earlier, China Overseas. Both are state-owned companies with no balance sheet issues, with no default risk, and with extremely low valuations. Each of them trading at 5 or 6 times price to earnings, and something like 0.4 to 0.5 price to book as a state-owned company. So I think it's interesting from that perspective, as you know, a high-quality state-owned real estate developer in an environment where China is going through a economic recovery and real estate recovery. Okay, great. If no more questions, let's end here. I want to thank everyone for participating in today's call. And if you have any more questions, please let us know. Thank you, and have a good night.